My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer Here. Other people want to make friends? Just trying to make you some money. My job is not just to entertain, but to educate, teach, put it all in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. The market rolled over after today's Fed meeting. Dow slipping 266 points, S&P losing 0.54%, Nasdaq declining only 0.24%. But honestly, what did you expect? I'm not surprised by what happened today. I'm surprised that other people are surprised. And that's my take on what the Federal Reserve did today. Jay Powell didn't lower the boom on the stock market. He simply acknowledged what you and I know already. Business is really good, getting better. A lot of stimulus around. But it's still not good enough because too many people are being left behind, especially African Americans and Hispanics. So as the chairman said, interest rates need to stay low, but not so low that they drive up prices too much too quickly. A little inflation is a good deal if it means we can get a lot more people hired. While we've got some shortages right now for certain, you're going to hear about that later tonight, Powell knows he can't stop those shortages without throwing millions of people out of work, which is a pretty severe solution for a problem that will ultimately solve itself. Emphasis on ultimately, but sometimes common sense shocks people. What? Is the Fed chairman supposed to be oblivious to the state of the economy? Well, that would make him a fool. Jay Powell's no fool. The jackals want to trip him up, but he refuses to give them what they want. The idea that Powell needs to figure out the game plan for the next 2 or 3 years right at this very moment is also absurd. When the Fed pencils in those 2 potential rate hikes in the second half of 2023, they're basically saying, hey, we got a real good economy. And if it stays this way, good. Well, if it stays this way, yeah, maybe we have to tighten in a couple of years. All right, we'll do it. Here's the irony. If Powell had said, and I quote, we don't see strength, we're worried about unemployment, and there are no shortages, end quote, people would be freaking out right now because it would look like the Fed chief had lost his mind. On the other hand, if he had said, oh, okay, the economy's overheating, it's time to taper bond purchases and raise interest rates, end quote, well, that would have made him look equally foolhardy and oblivious. An oblivious Fed ultimately leads to lower stock prices. Fortunately, unlike his critics, Powell knows what he's doing. The meeting in that sense is a watershed. Powell's left himself a lot of flexibility. He said, I quote, we are a ways away, end quote, from taking action, quote, but we're making progress, end quote. I don't know why that surprised people. If you thought we weren't making progress toward full employment, I have only one question. What are you smoking? Maybe you should give the guys at MindMed a call because you're hitting the psychedelics a little too hard. And if you thought we were making too much progress, well, then you know what? You really are living in a hawkish fantasy land. So what does this mean for the market? How do you adjust your portfolio? First, arguably, you don't need to do a thing. Earlier this week, I highlighted some work from Larry Williams, the technician I swear by. He warned us of a late June swoon. Well, guess what? Like I said on Monday, if you're nimble and you like to trade, you can take something off the table as long as you're ready to buy it back before the end of next week. The charts say don't buy, don't buy. And I give them more weight than the spots and dots that everyone's obsessing from the Fed. I took that course, by the way. I aced it. Now, second, the Fed basically did nothing today except take itself out of the equation for the next 6 months. That was it. That means you should buy stocks that can deliver better than expected earnings in a low-rate environment. The reporters are all trying to get Powell to commit to some silly timeline, some timetable that would wreck the economy and probably not stop inflation. He's not playing that game, though. He wants people to make a little more money. Who said wage inflation is a bad thing? Most people, except CEOs in this country, are underpaid. He knows there are imbalances in the economy, shortages, because business didn't realize we beat the pandemic this quickly, and there's been a huge amount of stimulus. But as Powell said, and I quote, there's a big group of unemployed people, end quote, and he doesn't want to leave them behind just to please billionaires, oligarchs, kleptomaniacs, and useful idiots in the media who want higher rates. These inflation hawks are like the boy who cried wolf. They spent decades warning that hyperinflation is always right around the corner. They've been wrong every time. When Powell mistakenly listened to them in 2018, he nearly wrecked the economy before he changed course. Now we actually do have some inflation, but the hawks no longer have any credibility in my eyes. Now I know some reporters will look at today's negative action and jump to the conclusion that the Fed's getting ready to take away the punch bowl. Couldn't be more wrong. Powell knows that demand for goods is very high. He knows that people are spending without taking down a lot of debt. Those are both good. Most importantly, he thinks the sources of inflation could abate on their own. Shortages ending, stimulus running out, rent abatements winding down, COVID going away. So he'd rather wait and see that than start tightening. You know what it's called, what he's doing? There's a word for it. It's called prudence. I like prudence, especially when it comes to your money. I think there are a lot of grizzled financial veterans who can't believe their eyes right now because they're so used to the Fed operating in a completely different way. Powell doesn't want to operate that way anymore. He thinks we can have strong job growth and strong spending without causing too much inflation, something, by the way, we didn't see in 2019. In other words, Powell believes we can have some key lime pie and have a decent size, but not too big piece, smaller piece. If that's the case, then I think you should simply stay the course, maybe using this decline to buy some high-quality stocks, especially industrials, right into the teeth of a downturn we anticipated here with the help of Larry Williams. With the Fed taking itself out of the equation for at least 6 months, maybe longer, the industrials have a lot more room to run. By the way, I include the technology stocks with the industrials. The problem right now is that the experts, from the economists to the reporters who follow the Fed to the hedge fund managers who trade off the Fed's moves, see, they just can't seem to grasp that Jay Powell just isn't one of them. Never mind that he was a private equity guy. He's like no other Fed chief I can recall. Powell actually learns from his mistakes. In 2018, he listened to the inflation hawks and spoke glibly about the need for 3 rate hikes. That blew up in his face. He quickly had to change course. Since then, he's approached his job with a sense of humility. He reiterated that today. He knows that it's hard to predict what the economy will do. So he wants to err on the side of a strong labor market, even if it means we have a little more inflation. Yet Powell's different. He isn't the Tin Man Fed chief like his predecessors. He has a heart that's very hard for money managers to gain because it's unprecedented. They're used to Fed chiefs who say, the economy's getting real good. Let's make it really bad. Let's hurt the working man. Powell just won't do that. For my whole adult life, the Fed had a zero-tolerance policy toward inflation, but it viewed elevated unemployment as a necessary evil. Powell has flipped that around. He has a zero-tolerance policy toward high unemployment, and he views inflation as a necessary evil. He's a central banker who actually cares about human beings. Of course, lots of very rich people don't like that Powell has a heart. They hate inflation, especially wage inflation, so they want to rip his heart out, like the great scene in Indiana Jones and the Temple of Doom. Bottom line, sorry, Powell's heart stays in his chest. And unlike his critics, he's got a brain, too.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.